Yo, what's going on, guys? It's Arkham here, and in today's video, we're going to be talking about high probability order blocks. What is a high probability order block? Examples of high probability order blocks, and lastly, we're going to do some backtesting and some pattern recognition. But first, before we get into it, make sure you guys are following me on Instagram. This is kind of like my backtest journal when I'm backtesting, when I'm annotating charts. On all markets, practicing, I would usually post them on here. Tons of insight, tons of gems here. I talk about, my bread and butter setups, tons of annotations, helping you guys see the market clearly. If you guys are struggling in any way, this is definitely gonna help out. But first, let's get into the definition. So order blocks are not simply just any down close or up close candle, but order blocks are a change in state of delivery. Not all last down close candles are order blocks, and not all last up close candles are order blocks. Narrative, direction, and structure matters, meaning there has to be a reason behind it. You can't just take a trade based on a last up close candle or last down close candle. There has to be a reason behind it. Where are you going? Where are you at? And where are you coming from? Those are the three pillars of the market. This is the wrong way to look at it. Obviously, the uptrend is higher. Current structure right now, we're in a pullback. This does not equal a high probability order block because the overall trend is higher, and right now we are simply just in a pullback. Price takes out liquidity, and then we go back higher. This guy sees the last up close candle and thinks it's an order block, and then he gets wrecked. When overall structure and bias was higher prices. And this is what I mean by not all last up close or down close candles or order blocks. You have to have a meaning and a direction behind it. Compared to this guy where the trend was higher, we break structure to the upside, price then retests at this last down close candle, he gets a sniper entry and gets like 1 to 8R. This is how to properly vet out order blocks right here, based on trend, where you at are in structure, and overall direction and draw. So the first example I want to talk about is the market maker X model order block. We're going to start off with the market maker sell model. So overall price takes out this liquidity. We then break structure to the downside. Price breaks this structure low. We then come back, pull back. This last up close candle, this is a high probability order block. After price then changes the state of direction, breaking structure and price, this would classify as a high probability order block and can be confident in price respecting this level. So price comes back into this order block, and then the rest is history. Same thing for the market maker buy model, but reversed. Price takes out this liquidity, breaks structure to the upside, pulls back into this last down close candle, then we see higher prices. This is the market maker X model order block. This could be your model. Tons of people have this as their model. Great trade. Then we have continuation order blocks. This is continuation of a trend. So whether you're in a bullish or bearish trend, this is very good. So obviously in a bullish trend, our drawn liquidity is this buy side liquidity pool right here. Our narrative is higher prices. We want to see higher prices. So overall, last down close candles are being supported in price action. So we're seeing higher prices. Our draw is higher, meaning every last down close candle should be supported. Price comes down, breaks higher, comes down, breaks higher, comes down, breaks higher. This is the continuation order block. And then we have the reverse for the bearish trend, where our drawn liquidity is lower prices. The drawn liquidity is the sell side liquidity pool. This is where we want price to go. Our narrative is lower prices. The overall trend is lower. Last up close candles are being resisted in price action until our target is met. As we can see, overall trend is lower prices. We push higher, break. This is now our high probability order block. Price comes back into this order block, breaks lower. This is now a high probability order block. Price comes back into this order block and then breaks lower again. This is the continuation order block. And then last but not least, we have the nested order block. The nested order blocks is basically order blocks nested inside of a higher time frame PD array. Whether that be a breaker, whether that be a fair value gap rejection block, this is another high probability order block. So in this example here, we have a break higher, the overall direction is higher. We have a pullback in price. We have a M15 fair value gap here, and then inside of that M15 fair value gap, we have a M5 order block. And then we see price come down, tap into this M15 fair value gap, and then tap into the open of this order block, and then we see the push higher. This would be a high probability order block. Next, we have the bearish nested order block. Overall direction, price is lower. Price then breaks lower. We have a M15 bearish fair value gap, and then we have a M5 bearish order block. Price comes in, taps into the M15 fair value gap, and then taps into the M5 bearish order block, and then we see price then continue a drop. This is a high probability order block right here. So overall, we have 3 examples here: the market maker X model, the continuation order blocks, and then we have the nested order blocks as 3 high probability order blocks that I look for in price action. Okay, for our first example here, we have the MMXM, the market maker model order block here. As we can see here, price breaks this buy side liquidity pool. Then we see an overall shift of structure. Price breaks this low. So now we're going from higher to now lower prices. So then that makes this last up close candle right here a high probability bearish order block. So we could do something like this where we have our limit order at the opening, and we can target these lows. For 1 to 3R. Price comes in, taps into our limit order, and the rest is history. Next, we have the continuation order block here. As you can see, price reaches a strong area of resistance, whether that would be a daily fair value gap, daily order block, some level to where we create a change in character where we go from higher prices, now lower prices. So the trend shifts from higher to lower. As you can see, price comes back up higher, taps into this bearish order block here, this last up close candle, and then we see a change in character from uptrend now to downtrend. So coming into a market, we can put our limit order right here, stop loss just above right here, or take profit down there, or maybe right here for a quick 3R. Price then comes up, taps into our limit, price then breaks lower. This last up close candle now becomes our second bearish order block. We could probably do something like scale in right here, limit order right here, same area targeting. Price comes up there, we scale in. Price then breaks lower once again. This last up close candle now becomes our third order block here, which we could probably do a third scale in right here at this opening. Stop loss just up above right here, same area targeting. Price then comes in, taps into us once again, and then the rest was history. Overall, the trend is bearish, and we're using every last previous up close candle, and we're expecting price to reject from these levels. As you can see, price came up into this last up close candle, rejected, came back up into this one, rejected, came back up into this one, rejected. Every time it rejected, or we seen that last up close candle, we were able to scale in. And this is overall how maximize opportunity in the markets. Then last but not least, here we have the nested order blocks. This is essentially the order block nested inside of a higher time frame PD array. So as you can see here, overall trend on the market for the ES is higher prices. We have this last down close candle inside of this M15 bullish fair value gap right here. So overall we have a M15 bullish fair value gap, and then inside of that bullish fair value gap on the M15 we have a M5 down close candle just below it. So what we can do here is we could do something like this, put our limit order right here at this low, stop loss just down here. Could probably do a 2-to-1R, quick 2-1R trade. Price and breaks lower, taps into that last down close candle, then boom. Alright, that's gonna be it for today. Thanks you guys for watching. Make sure you guys hit that like and subscribe button. I hope you guys learned something new here. I hope this helped you guys better with understanding order blocks and which order blocks to respect and which order blocks not to respect. Obviously you got to understand it's based on the higher time frame direction, higher time frame structure and narrative. Not every last down close or up close candles will be order blocks. You have to have reasoning behind them. Hope you guys learned something, and yeah, see you guys there.